Welcome back, guys. This is Alon for AcornProductions, and I am extremely excited for what I have for you guys this week. Now, to start off this weekly recap, first of all, this is a little bit of a special one. We're going to be going through some changes to the portfolio. If you guys didn't know, we only make changes every 2 months, so as you can see, the past 2 months have not been my proudest 2 months. We haven't made any changes besides, we had a few liquidations. We did play around a little bit with stop losses. So in that sort of aspect, I did convert the stop losses to Bitcoin, which is what I had decided to do at that point with the strategy. Now, we've just recently started a new month, and I've just finished all the changes for my portfolio. Let's have a quick look here, guys. This is what it looks like now. We've trimmed down Bitcoin all the way. I've added in micro strategies again, just to get a little bit more exposure. Now we still have all our ETFs here. You can see all chilling at 5%. Now I've added a new holding. We'll touch on this in a moment. But essentially, guys, we've also got some small holdings. And I might be launching a video soon about stop losses, just recapping essentially what happened in regard to stop losses. Now, I want to go over the changes in this video. I want to keep it not too long. So without further ado, let's start with the reserves. How did they change and what does it look like now? Okay, guys, this is what our reserves look like at the moment. As you guys can see, we had Bitcoin in the reserves last time. So over here we can see this is what it looked like before this month, and these are the changes that I've changed it to. So starting with silver, we've actually reduced our position in silver. Remember, these percentages are the percentage of 1/5 of the portfolio, not the whole portfolio. So 15% of 1/5 of the portfolio was silver, now it's 10%. We've actually increased gold from 15% to 20%. So essentially we've got double the gold as we do silver. Now we've added long-term government bonds to replace Bitcoin. I was thinking about it and I just thought to myself that reserves are just not the right place for Bitcoin. I do see it as a currency. I do see it as highly liquid. All of the things in the video that I recently posted, I do think Bitcoin is an important part of our portfolio, but I just didn't really think that I could put it in the reserves. Remember, the point of the reserves is to stabilize and support the portfolio. And I really didn't see Bitcoin, while I wanted it as an addition to the portfolio, while I view it as a currency, I just didn't see it stabilizing and giving support to the portfolio, as in what our strategy should be doing, And all of these assets are generating us a little bit of dividends, a little bit of cash on an ongoing basis that we can continuously reinvest into the market. And that does sort of fit into the theme of stabilizing and supporting for me personally. So we've added in long-term government bonds. We've actually reduced all bonds, so BND down to 25%, and we've increased our corporate bonds up to 20%. So this is the new structure of the reserves. You can see most of it, almost 70% of it, is cash-paying bonds. Now, bonds is just lending out your money with an agreement to receive a set amount back. So essentially, it's kind of a safe investment. Now, with long-term bonds, these are mostly 20-year plus bonds. And I have to tell you guys, this is paying 3.5% at the moment. But it doesn't look too good on the graph. I don't have time to go into it with this video. But these are actually paying us a nice little yield. I think they pay every month, so it's a nice consistent income for us that we can reinvest or just store in the bank, which is really nice. So these are the changes to the reserves. Let's jump into the chest next. So with the chest, guys, we got to remember what the purpose of the chest is. It's essentially to provide stability and structure for the whole portfolio. So while the reserves is there not necessarily to make money, everything here is to make money, but with the reserves, it's very, very safe. It's very, very, a little bit of income and just essentially ready to sell, ready to be a part of that portfolio that's not going to fluctuate too much. Now with the chest, we wanna sort of progress forward. We wanna put really, really reliable things that will provide stability and structure and give us really, really good returns that will take more risk, of course, than the reserves. And it's essentially just a dependable core, the core structure of the portfolio. Remember, this is 40%. It's essentially double the size of any other part of the portfolio. And it's just supposed to give us stability and consistency, so appreciating upwards in the right way. So what we've changed since last month, we've cut out all the ARK funds. I just didn't see them fitting with the message, stability, structure. They were a little bit riskier. They were a little bit, chasing high valuations and stuff like that. And it just doesn't give me the stability that I'm looking for. Now, what we've specifically done, guys, we have kept most of the positions the same, essentially 5% of the top of the whole portfolio, but essentially 12.5% each. We've got everything equally weighted now. And essentially we've added 2 new things. So what I've started doing, which I want to continue to do long term, but we want to have a global portfolio. And I was having a look, and I have mentioned it in previous videos, we were over invested in the US economy. Now, to be fair, the US economy has historically just the best returns. It's a really, really good economy to invest in. They are sort of like the kings of capitalism. But essentially, I did want to diversify because there is a risk by putting in, all your eggs in sort of the America basket. It might collapse. It might not always be as good as it is now. So I've added specifically 2 new ones. One is literally just every single market that's not the US. And then we've added India. I really think India as a country is making the right moves, and it is primed to be something that we want exposure to. Now in the future I might add an Australian one, German, UK, who knows, we might add other countries in based on performance, but we do want to see this still moving in the right direction. So we've kept all of the other ones that haven't been the ARK funds. So essentially this is the change now. We now have 8 holdings instead of 10, and they're all equally weighted. And in the future we will continue to diversify this, but at the moment we are moving in the right direction here. Okay guys, touching on the left horn, let's just quickly recap what it used to be. This used to be our short-term holds. So we were trying to provide excess returns by taking on additional risk through short-term trading. Now, I didn't really think this matched with the goal of the horns. Keep in mind, the goal of the horns is where we take the risk, where we take the big risks, and we want to make big returns during the year, which will give us sort of the upside in our portfolio. But because they're, only 20% of the portfolio, we don't need to worry too much about losses, and there is a bit of diversification here. But we only really want to be picking things that do look like they'll give us that additional reward, and we're willing to take a risk here. So before we were doing short-term trading and the right horn was long-term trading, but now I want the left horn just to be individual holdings, not ETFs with high growth potential, less pressure on the time frame. So before we had Google, Apple, Microsoft, and Coinbase in the short-term holds. I'm keeping Microsoft, Google, and Amazon here. I did have Amazon from the right horn, you'll see next. But essentially these are probably not long-term belonging here in this part of the portfolio. I will be phasing them out because they're already in our ETFs. Google, Microsoft, Amazon, they're already core holdings of most of the big indexes. So the new additions have been Estée Lauder's. We've held it before, but it got triggered by a stop loss. And we have PAH3, which is pretty much Porsche, which owns a lot of Volkswagen. Really good. This pays a really high dividend too, like 5.5%. Now we've added Coinbase. I really think Coinbase is on the way up with the crypto industry as it continues to grow. The crypto industry is, everyone's had enough of it at the moment. That's what I feel. But when it does gain traction, when everyone's attention is there again, when there's a little bit of good news, I really think Coinbase and MicroStrategies, by an extension, this is MicroStrategies. We've held it before. We've done well with both of these in the past. And I think really just needing more exposure to the crypto industry without actually holding crypto. So these are essentially 10% of the portfolio because together they're 50, half of the 20. I feel really good about these long term, really looking forward to holding them. So this is the left horn. This is now going to be individual holdings, more on the company side. And the right horn is what we'll explore next. So with the right horn, guys, this is what it looked like before. We had a variety of different holdings. You can actually see we had MicroStrategies, we had Amazon. These are some of the things we had there before. But I've decided that I want to essentially leave all those now for the left horn, those sort of company holdings. And I want to exclusively hold all the crypto only in the right horn. I think crypto is incredibly high risk. Everybody knows that. But it's also incredibly high reward. So I am diversifying. It's essentially going to be the little crypto section of our portfolio. I didn't really think it was genuine to be putting Bitcoin in the reserves or other parts of the portfolio, as I mentioned before. And I really just want this 20% of the portfolio to give us that exposure to the crypto industry with my essentially bets on the crypto industry. By far, Bitcoin, I think, is a must-have. This is 50% of this new portfolio, which makes it 10% of our total portfolio. Now, Ethereum, so I'll go in this later in a different video, guys, but Bitcoin to me is a first generation cryptocurrency. Ethereum was the second generation. It changed. It became more than just money, more than just a store of value. It became a way where you could add coding to it, which opened up the door. And then all these third generations crypto came, Algo, Matic, some of these were before the other, but they really just expanded on the use cases. The technology is a little bit more crazy, a little bit more developed. Matic actually sort of works with Ethereum, but essentially this is what I really feel comfortable. This might change, but like Bitcoin and Ethereum are going to always be a huge part of this portfolio. We might play around with these in the future, but these are essentially my favorite holdings. Algo is my favorite long-term tech-wise. I've used it myself, along with some other cryptos, and it's by far a really, really good crypto tech-wise, but tech doesn't necessarily make it useful. At the end of the day, these cryptos are only as valuable as the communities that use them, as I mentioned in my Bitcoin video recently. So guys, that's probably all I have time for today. Thank you so much for tuning in. I was really, really excited to make these changes. It's been a terrible 2 months, and I got a much better feeling about finishing the year strong. We're gonna continuously make this portfolio better over time. And when I mean better, I mean truer to its purpose. It's got 4 different parts: the reserves, the chests, and the horns, left and right. We're going to continuously develop each individual part to help it fulfill its purpose and essentially to diversify it, making a very powerful global portfolio over the next few years, which I am sure will be evident with its track record. I'm continuously investing my money here, and I hope to be the biggest investor for as long as I can, to keep me humble, to keep me honest, and to keep me on track. Now, if you guys have any ideas on things that could go in different parts of the portfolio, if you disagree or agree with anything that I've added, I would love some feedback with what you're doing and what you think about what we're doing here. If you've watched all the way to the end, I appreciate you. You're probably one of few at the moment, and I'll catch you guys all next time.